Happy Friday, traders. It's 8:01 a.m. Chicago time on Friday, the 6th of November, 2020. This is episode number 1874. Thanks for joining me today. The last day of an extremely eventful week and continuing to be eventful. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, largely risk off sentiment as the markets, as we would expect, the markets are coming off of a week where equities and equity indices have run up quite a bit since the beginning of the week. We're coming into a weekend where the presidency is still hanging in the balance and uncertainty continues for the markets going forward. It would make a whole lot of sense to take some of some of the gains off ahead of the non-farm payrolls and to go into the weekend with a more balanced book is what I'm guessing. But overall, risk sentiment is off currently. Crude oil is off 70 cents. That's the laggard today, 1.8% down, followed by the DAX, which is down 0.46%. The NASDAQ's off 54 points or 0.45%. The bonds are off 23 ticks, which is interesting. And the dollar index is down to $92.24. The dollar getting a little bit beaten. The leader today is gold. Inverse the dollar. Gold has basically moved $100 this week, I think, or close to it, trading at 1960, up $13.40 from settlement. And the indices, the Russell and the Dow are just above unchanged. But what is up today is gold, the euro, the yen, and the cable, along with the Dow just slightly up 9 points or 0.03%, and the Russell up 2 points or 0.12%. So clearly risk off, but we've traded in the S&Ps. We'll go over that in a minute. We've traded mostly under yesterday's range in the S&Ps. So we saw weakness in the Nasdaq yesterday right after the open, and that's carried over overnight. So that's where we stand in terms of what is scheduled. There are quite a few numbers, but the chief of which are the Canadian employment and U.S. employment figures. Non-farm payrolls came in at 638,000 versus 510. These are solid numbers. Unemployment rate 6.9% versus expected 7.7%, also a solid number. We still have wholesale inventories at 10 o'clock, a half hour after the open, expecting inventories to drop by 0.1%. And then this evening, obviously, the U.S. markets will be closed. The Chinese balance of trade, exports, and imports are coming out, and that wraps up the week. So that's where that stands. The latest and greatest on the election is obviously all over the news, Twitter, and everything else. I found the website. A couple of you have asked the website 538.com, their live blog on the election, very, very useful. These guys are professionals and have provided information in a very steady manner. It came to my attention yesterday, and it's been pretty good. Where it stands now, overnight in the counting in Georgia, Vice President, former Vice President Biden has taken over in Georgia by a very small margin. And in Georgia, the law says that any contest that's within 0.5% of the votes counted can be either of the candidates can ask for a recount to verify. There's all kinds of rhetoric and some really awful things being said about Pennsylvania and the electoral process and the counting process, but we expect a lot of drama with this, and the market obviously responds. The market obviously responds to whatever is put out there in that fund managers and trade desks are constantly attempting to um, position themselves depending on what's happening in real time. So, keeping track of the election is not just a political thing for the markets. It's really about uncertainty and how things roll. Each candidate has their own view on energy and other areas, and that's going to have an impact on how things trade. Okay. So that's that. Let's hop right in and do a quick review of yesterday's expectations. Yesterday, the primary scenarios for a dip to 70 even. I was looking for a dip to 70 even and then a push up into the 16 area before the market settles down. Did not do that. It pushed right up. Um, it pushed right up off the open. That scenario is scenario two, is looking for a push into 22.25 right here. This is 22. This is an area that's got some confluence, and then 25 um, is a naked point of control. Is looking for resistance in the 22 to 25 area and a rotation back down into the overnight range, and then for it to go sideways until the FOMC came in. That scenario was pretty much dead on, and I'm saying that um, with the idea that you can sit here and say how your analysis is dead on, but really, unless you execute it, doesn't mean diddly squat in the real world. But overall, we had a small open auction out of range and then a push with a pullback to mid, pullback to mid, pullback to mid, and then we finally propel ourselves to 2250. As soon as we hit the 2250, which is a stock zone that's been here since maybe 5 weeks ago, we pull right back into the '07 area, consolidate, and then we finally break through the mid. Yesterday in the head trader channel, I talked about, for those of you, I don't know how many of you here are with Convergent. Maybe raise your hand, maybe say hello. I had talked about the fact that if the way this is setting up now, having hit the 2250 and having failed to take out the 2250 and extend the initial balance higher, the yellow line, the first hour's high. The most likely play as it consolidates is if it breaks through the '08, it is likely to go to 92. That's about 16 points of range with about 5 points of risk. Pretty decent risk reward on that trade. And that trade ended up pushing all the way down to the IB, plus a tick, which is quite incredible. Before we get this crazy launch, the biggest rotation of the day, this was the odds of this happening right here are very, very low, and the odds of a double IB low to maintain itself is somewhere by the end of the close is 17% probability. Wow, my mouse is going nuts here. 17% probability, historical probability, that we would finish the day with this double IB low intact. And it managed to play the 17% probability yesterday, since it did not break the double IB low, but it also played the 3% historical probability that the IB would not break at all. So yesterday was very unusual. We basically covered the entire range. There's a 98%, 97, 98% historical probability that the first hour's range would be the biggest range of the day, or the first hour's range remains intact for the rest of the day. This is a very, very unusual a very, very unusual occurrence, but here we have it. given all of the election results, all the political noise, the news conferences, all that stuff is quite an amazing feat. So as we pushed on this trade that was discussed again in the head trader channel at Convergent Trading, this trade of a break of 08, go for 92, and then look for the extension of the IB low. The extended target is the prior days. The extended targets are 285, which has been in play, and 80, which is the prior day's high. This then was refuted back to the 08, and it looked like we were going to go for the high, and we did not succeed. Yesterday's profile, relatively decently balanced, but overall we moved with a higher low and a shift in the value area yet again. So we are one time framing up on the daily. We've broken the one time framing down on the weekly, and we are likely to keep chugging along to the long side going into next week. This is likely to tiptoe itself as it looks like based on statistics, and this comes from uh, analysts of elections not belonging to either party. Statistically speaking, the um, the most likely candidate, the most likely president-elect will be Biden here, and the market's responding by climbing higher. The reasons for that, I don't really care. I'm not going to sit here and talk about it because I don't know. But the market is very, very likely to continue higher as we remove some of that uncertainty off the table. And there's some prospects that Biden brings to the markets that are positive as well as negative. So we'll see how that shakes out, and we'll see how difficult or how litigious the process is going to be. Litigation is going to continue to bring uncertainty to the markets, which would probably continue to keep volatility high in the VIX in the 35 range or so. 35 the 35 range or so, which is good for us day traders. We want these rotations, we want the volatility, we want the movement. The last thing we want is what we saw in 2015, which was a VIX of around 12 and a day range of 8 to 12 points or something like that. Of course, with more rotation, more volatility comes more risk, so be mindful of that. One thing I wanted to just make everyone aware of, this is what I'm talking about here. Let me extend these MCs forward, that MC and that MC. So as we move forward, here's what we've done. This day here breached the one-time framing down on the daily. So now we've gone from trending down to neutral based on Monday. Tuesday triggered one-time framing up on a daily, meaning that in the day time frame, the trend is higher. Looks like the S&P is rallying now, and we are above yesterday's low. So back in range changes my scenarios a little bit. So we're one-time framing up, one-time framing up, one-time framing up with a gap, gap, gap. We've had a gap every day this week. The structure seems to be really disjointed. Look at this profile for the week. The important thing about this week's profile is the point of control is near highs. As we push above today, as we push above this point of control here from yesterday, the 35, the 3511 area, 3510, 3511, we have a lot of propellant or a lot of fuel to rocket up through into 41, which is the last high. The 41 is the most recent swing high, clearing the deck for 76, 75, and most likely pushing new all-time highs within the next couple weeks, probably next week as the election election results become clear. Looks like Biden's being called right now. It looks like Biden is being called out as the president-elect with 306 electoral votes in Georgia. being most likely statistically pushed towards Biden's camp. So he is now, it's been announced that Joe Biden is likely to be the 46th president of the United States, and we see it in bookmap right here. So history, oops, sorry, history occurring in real time. I don't know what the deal is here. Let me do this. I'll show this and I'll get rid of this block and this block. There you have it. It's really breaking out. It's so volatile. I'm actually focused on the micros over these, plus I'm distracted. Here's what's going on. It's really blown through that 34, 10, 11 area and is screaming higher. Is screaming higher now. It is starting to move into 22, the 2250 area, and that's where we stand. I want to actually get moving here and get off. I need to switch back to the ES and start focusing on the markets. So let's get to it. The overnight session is quite balanced to the negative side. That's been wiped out. We are now positive, and it's time for us to get back to trading here. This is actually a distraction right now. So this changes everything. My scenarios have completely changed now. At the moment, it is likely to consolidate and push through the 22 and squeeze towards the 41 area. I'm expecting 41 today, likely a breakthrough, and then consolidate into the close. This is what I'm looking for into the session, barring news. This was not my primary scenario. My primary scenario was actually before this break was actually to be stuck in yesterday's range and likely see a lot of resistance at the 34, 10, 11 area. Now it is likely to break higher. There's some pretty decent volume. Delta has picked up quite a bit here, and the market's really following through. The secondary is a push into the 2250, 2250 into 25 or so, breaking down, coming back and holding steady. Not very likely. The expectation is it's likely to continue higher. We're opening in a range in value against yesterday's point of control and yesterday's close. The overnight inventory was almost 100% short. So the squeeze is likely to continue higher. Anyway, I just need to get off here. There's not much more I can say. I want to focus on the trade instead of the trader bite. Good luck today. Mind your risk, and we'll see how things play out. There's a lot of drama going on in U.S. politics and global politics as a whole, and it's time to go trade. Take care.